So, these are the two strategies that, in my opinion, every beginner should start trading with. Simple and effective, straightforward and reliable, like a hammer. These aren't two strategies to choose between. They are two top-tier strategies, each designed for opposite market conditions. One works best on charts with a strong trend, while another is designed for sideways movement. That means you need to master both to trade effectively. Let's take a look at the chart. We see a clear downward trend. Each new high during a pullback is lower than the previous one, and the price is pressing against a support level. Looking at the candles, it's clear that the price is struggling to break this level, leading to consolidation. Then we see a false breakout, followed by two bounces, confirming that this is a strong support level. I spotted a classic continuation pattern, the triangle. This signals that our entry point will be at the breakout of the support level. But since the price has already tested this level, I don't rush in. I wait for a breakout of the next support level below. Now I determine the expiration time. Since there are no immediate support levels below, it's logical to expect the price to keep falling. In this scenario, a 5-minute expiration is enough for the move to develop. Before entering the trade, we need confirmation. The first confirmation is a change in volatility. At the support level, where volatility was previously low, it suddenly spikes. That's a strong sign that the breakout is real. The second confirmation is the ADX indicator. Hit a like on this video if you know how it works. For those who don't, here's a quick refresher. If the ADX line is rising, it means the trend is getting stronger, increasing the likelihood of the breakout. ADX has 3 lines. The first is the ADX line in cyan, which shows trend strength. If it's above 20 to 25, there's a strong trend in the market. The second line, the green one, measures the strength of an uptrend, while the third, red one, measures the strength of a downtrend. Right now, the red line is stronger, meaning the bears are dominating. In this strategy, ADX is used as an additional confirmation. We don't make decisions based solely off of it, but if ADX is rising, the red line is above the green, and the price is breaking a level. That strengthens our entry signal. Everything works together. The pattern, breakout confirmation, volatility shift, and ADX. That's how you make informed trading decisions instead of just relying on indicators. I want to start making money online, but I don't know where to start. What if I lose my money? I hear this all the time. Look, trading isn't some magic button to get rich overnight. But if you want to try it the right way, without wasting money or months figuring things out, here's how. I trade on Quotex, and right now, you can copy my trades for free while learning in real time. No upfront fees. I'll get a commission from the platform instead. That means you can test everything on a demo, see how it works, and decide for yourself without spending $1. It takes minutes. You get the currency pair announcement. Open it on the platform. Then you get the signal. Place the trade. And that's it. Will this make you a millionaire tomorrow? Of course no. But it will get you started, you'll see how it works, and see your first profit without risk. This is the easiest way to step into trading. Just check it out and see if it's for you. Click the link, get set up, and let's go. This strategy works not only with the triangle pattern, but also with other continuation patterns. Here, we don't have a clear global trend. The price is moving sideways between this support level and this resistance level, which was broken, forming a flag pattern. The flag consists of 2 trend lines and a flagpole. During the flagpole formation, volatility is high, then it drops inside the flag itself. The price consolidates between the 2 trend lines. Volatility decreases, then spikes again as it breaks one of the trend lines. This signals that the local uptrend will continue. As a result, the overall sideways movement could transition into an uptrend, since the price has broken a major resistance level. After the breakout of the trend line, we enter a 6-minute trade. That's enough time because there are no immediate resistance levels above, and the potential price movement equals the number of candles in the flagpole. We won't rely on ADX in this trade since it's only useful in trending markets. Analyzing the chart structure is more important. After the breakout, volatility remained stable, but thanks to the right expiration time, the trade closed in profit. Now, let's go over the second strategy, which is used when there's no clear trend. In this case, the key is to identify when an upward or downward move is about to end, so we can trade in the opposite direction. Here's an example of a sideways market with no obvious trend. For this strategy, we need a reversal pattern that signals a potential trend change and a precise entry point. Reversal patterns indicate that the current trend is weakening and the market is ready to change direction. They form near support and resistance levels when the price tests a range but fails to break it. Since all reversal patterns are based on support and resistance, they confirm whether a breakout is valid. Now back to our chart. The local trend was bullish, but the price hit resistance and failed to continue upward. Several breakout attempts failed, and the price started bouncing off this level. However, each bounce brought it back to the support level, eventually forming a head and shoulders pattern. We also notice a false breakout of the support level. The price initially broke below, then pulled back up. Now, it's testing the level again with a low volatility. When the volatility shifts, a real breakout should happen. But there's more. The support level where the false breakout happened is weak. Doorward sides. The price has tested it multiple times and the bounces were small. This means that another bounce is pretty unlikely, and the price will probably just break through. After the breakout, we enter a 5-minute trade. This is enough time for the price to continue moving. An interesting detail: about an hour ago, this same chart had a similar setup. Back then, a double bottom pattern reversed a local downtrend into an uptrend. That pattern worked out, providing extra confidence in our current trade. If you enjoyed this format, make sure to support this video with a like and a comment. Your feedback helps me understand what type of videos you want more of. See you in the next video.